We've got about a minute to go. I'm sorry I'm late. I've come straight out of the staff session with Julian. They are great fun, those things, and we have run over a little bit, so we're just in now. I think the team will be flooding in as we speak, and we will be able to get straight into this as soon as we do get onto YouTube. We're about 48 seconds away from doing that. If you have any quick questions, you can put them in the questions box. If you want to say hi, you can always say hi. Hi, everybody. Good to see you all, guys. It is nice to be in this session. It was a bit haggardy in the last half hour. Oh, cool, Mai. Just you restarted. Okay, let's go live on social media, Mai. If we're late, let's get at it. Sorry we were late coming in. Oh, brilliant. Hi, everybody, and welcome to the market. Hi, everybody, and welcome to our market overview for Sunday night or Sunday evening, Singapore, Asia, New Zealand. Good Sunday to you guys as well. Hi, everybody. Great to have you company today. It's going to be another great session. We've got the team coming in to talk about the markets and what's in front of us today as we go through the evening. We'll be in with you guys for about 35, 40 minutes. We're going to have people come in and talk about macro. We're going to have people come in and talk about data. We're going to have people come in and talk about currency strength index. We're going to have gold. We're going to have oil. We're going to have crypto. We're going to have some technical stuff. We're going to have the whole lot. It's going to be a bloody good next 35 or 40 minutes. So do stay tuned to us, whether you're on YouTube, whether you're on Facebook, whether you're on Twitter. Hang in and enjoy the show. If you're live in the Zoom session, that is great as well. Now, if you're on Facebook or YouTube, if you have any questions, post them in the questions box and I'll bring them into the group and we'll try and answer that for you at the end of each session from the presenters. We are going to move through presenter for presenter as per normal today. Looks like a beautiful part of the world behind you, Julian.
I think it's probably the only part of New Zealand where it isn't raining today, Paul.
I'm honestly surprised that I am surprised that we're on air from here, to be honest, mate. While we're not having the flooding difficulties, it has been as big a storm as I've seen here.
Yeah, yeah, we're reaching out to all our friends in Christchurch because it must be pretty awful for them. They've had another 1 in 100 year flood this year, and I think there's it's an exceptional event down there. So my thoughts are going out to them. It must be pretty rough. And folks, for those of you that don't know New Zealand very well, from where I live in Auckland, that's about 1,200 kilometres away. So Christchurch is quite a fair distance, and they get a completely different set of weather patterns to us softies up here in Auckland, who when it goes below 10 degrees centigrade think the world has come to an end. So
they get a 100-year event every year, don't they? Be it an earthquake, something happens every year. It's a 100-year event.
I'm going with they're resilient people. They feel like New Yorkers to me. They're resilient people.
Let's get on to macro economics.
Yeah, let's talk macro, shall we? Look, folks. So when we think about the world of macro, I think there's three key themes that are really important to us at the moment, right? The first one is government spending, and I think that's a bit of a slow-moving, situation, but it's a similar message across a lot of the developed nations, right? People are spending money. Except China, which is going through some incredible fiscal restraint and some credit contraction. We are seeing the rest of the world actually spending money like crazy. It's just a question of your definition of crazy, depending on which government you happen to be. For those of you who attended my session last week, we did a bit of a teach-in for the ATW students. We saw some of those budget deficits out there from some of the major countries in the world, and they're pretty staggering to see by any type of historical standard. So, one thing's very clear is that fiscal spending is certainly running at a much higher rate. But as always, as traders, what we're interested in is something called the rate of change, right? So what we have to do is we have to think about what's in the market, and what's in the market today is that governments are spending a lot of money. Okay, we know that, we can see that. Okay, so when we think about this, what we've got to think about is what will change the way the trends that are working right now. So sell dollars, buy commodities, invest in the recovery stocks, and I guess depending on which day of the week it is, there may be a value trade in crypto out there as well. True. So what is going to change any of this? So what's going to change it is governments making a change to their policies. So starting to tighten a little bit, seeing the recovery get underway. Maybe things are going to turn around in India, but sadly I've seen some stats around South Korea and Vietnam. They're beginning another, I don't know which wave you want to call it there, but let's just call it another wave that looks quite serious for a couple of those Asian countries, which could be interesting. So there's two different countervailing forces, right? None of those are going to create governments which are going to stop spending money on either front. I don't think so. For the time being, we always look for that rate of change in government spending. And definitely, obviously, we look to the biggest country in the world, the United States, to see if Biden can continue to get his aggressive spending policies through. They're trying desperately to put a lot of money into people's hands before the midterm elections to prove that they can. And so we'll see how that unfolds. The second main theme, I think, going on right now in life is the inflation theme. Okay, so there are two schools of thought here. There's the first school of thought, which says the world has changed. This is a brand new secular inflation cycle that we're moving into. As a result of that, inflation is going to slowly start to pick up. Everybody believes inflation is going to pick up. Therefore, it will pick up. Therefore, it's going to be enormous. And therefore, we've got the beginning of the 1970s happening all over again. I sort of beg to disagree on this on a number of different scenarios. Two of them, one of them being monetary economics, which I'm a student of. I guess that's how I was trained, and supply side economics. That's my background as an economist. I think it's the inflationary spike we're seeing right now is exactly that. It's a spike. It will not be sustainable. And the other way is the good old Keynesian way, right? Which is that when you think about it, you've got to look at productivity as well, and that's improving. So I'm a little bit skeptical about the inflation thing, and I do get this story. However, right now the trend is intact, right? People are buying things because there's an inflationary story out there, and until that buying things comes to an end, the inflation story will continue to maintain itself, and therefore we have to again look for a rate of change. So when we see that inflation start to settle down, then people will have a rethink. We believe it's going to start to disinflate. I don't quite know what the right expression is. Let's just say fall back a little bit. In about 2 or 3 months' time is the beginnings of when we should be seeing those feed through to the figures. So let's keep a close eye on that, because that's going to turn a lot of markets at that moment in time. And we always know that markets tend to anticipate. So I would suspect over the next month or two, people will anticipate some changes. So be on your guard. However, in the meantime, this is a bull run in the commodity markets, and you've got to respect that. So put some moving averages in place, put some stop losses in place if you're long. And if you do get caught with a slightly long position, then, make sure it's protected. And on the other side, if the market does dip, it would make sense to be able to buy that first big dip that we see. Okay, that's how the sentiment cycle and the cycles work. The markets don't top very easily with a big one-fingered salute and then descend into oblivion. It doesn't normally tend to work that way. So we'll see. Then we'll need to see a recovery on that second wave. And if it doesn't quite make it to the previous highs, then we can rethink our strategy. So the reason why I'm mentioning this, right, is because we're seeing a little bit of this, a flavor of some of this stuff starting to happen out there. Gold is reaching a pretty important point. Ainslie will talk about this in a few minutes, I'm sure. It's on its way towards the high 1900s, possible 2000s. What's it going to do there? It's got to have a rethink about what it wants to do next. When we look at oil is sitting here at the top. Yet again on Friday, it tried to break out above, took out a few stops. For sure, people who maybe were short got stopped out and then promptly reversed on Friday afternoon and closed back inside the range again. Slightly worrying. I'm just double checking my figures. Yes, slightly worrying, but it's only a day in a trend that's been going on for months and months. So we have to preface this by saying that maybe as we've reached this point, oil still looks bullish, and we have to respect that, but it's maybe put in a very short-term top. We'll see, but it also provides us with a technical trigger now, so that if it breaks out of the high that we're seeing, so in other words, it takes out Friday's high, it wouldn't be unreasonable to think that it's going to set off to a new price level, or whatever that price level may be. Maybe we look to try and move up to $80 in Brent and the mid 70s in WTI. Who knows? But I'm going to cite that Friday's high as being pretty important now for follow through for the next wave, right? Okay. Finally, the third item, and I will keep this brief now, Paul. The third item is the pandemic. Okay, the pandemic is very important. Why is the pandemic very important? Because it's changing all around the world. Now we have a 2-speed pandemic. Okay, now we have the Americas recovering, or North America at least recovering. We have Europe trying to get on top of its vaccination program, and hopefully cases there are either falling or the state of the economies are improving in a correlated fashion. And yet in Asia, which has been protected from a lot of the pandemic because of their relatively aggressive policies at the beginning, we're now seeing some problems occurring in places like Vietnam. We all know the Indian story, so we'll move on from that. But Vietnam, South Korea, Malaysia is seeing a spike up in cases now, and so is Japan. A very worrying pattern across the, let's call it the South China Sea area. The ex-China area of Asia is now creating its own challenges because that's where a lot of the world's supply chains are located. The core of the supply chains are located. So that presents another problem about how you deal with that. I don't know whether markets are discounting that or not. Not quite sure what they should do about it. But I think right now it's a worry, and it's something you ought to keep your mind on. If some of those countries lose control of the pandemic in their own region, then there's going to be a problem. But we won't know that for another week or two. So keep your eye on those figures and make sure that you're keeping on top of it, because that could have some strange side effects. It might push commodity prices strangely even higher because of supply shortages. It might also push stock markets down because of worries over the fact that the future isn't looking quite as bright as everybody thought it was going to be, because global growth in the whole could not be as high. So bit of a double-edged response there. So look, those are my three key themes, the three key areas I'm looking at. And as always, I want the rate of change. And don't forget, the market knows a lot already. What you got to do and think about is what's its reaction going to be to some new news and how it then behaves, right? So this is what rate of change of all of those ideas is so important. Right, the ideas are in the market. I won't be saying anything new to any of you, but what I will be saying is look at that rate of change, because that will determine where markets are going to go. And a lot of these trends are overextended. Okay, the sell US dollar trend is overextended, not in every currency, but in a lot of them. Right, the commodity cycle, as we know, has done very well in many different markets, and they're all behaving slightly individually. You know, big shout to the coffee market on Friday for setting a brand new closing high, going back about 5 or 6 years, I think it is. So finally, coffee's coming to join the party. I do love that. I love coffee joining a party. It seems to sober everybody up, but gets them excited at the same time, Paul. On that happy note, I'll say goodbye.
Mate, I've got a couple of things for you before you do go. I appreciate you being around. I'm going to try and read this question to you. It might take me 3 or 4 minutes. Let me see how we go. Copper. Following your advice to check the cost of production and who are the key players, Chile and a few others, but Chile seems to be the biggest producer. $2 to $3 cost, but has to be sold above $6 to be profitable. Seems a bit weird. World demand is going up, and for the past few months, year has been running up with the past few weeks looking for to be a retracement, but looks like a pause before the market continues. Recycling cost of copper is approximately $4. Its buying pressure is there, but I'd like to know what would be the key. In fact, just wondering, read up on no doubt feel the fundamentals of copper.
But yeah, maybe I can talk. I'll talk for 1 second on that, Paul. Look, there's all sorts of moving parts to the copper story, right? At the forefront, copper is the primary element on the periodic table that is going to be part of the energy transition. If you want to electrify a car, you need copper. If you want to electrify pretty much anything, you need copper. So the demand for copper, I think, is going to outstrip where it was over the course of the last few years. Then you've got to think about the supply. And the Chilean news about a week ago that one of the biggest mines in the world is in Chile. Okay, the Chilean news a couple of weeks ago, they're looking to nationalize the copper mines. I don't think was taken particularly well by the world. So look, key stocks to think about. You can look at Freeport-McMoRan, which is FCX, which is a copper proxy on the New York Stock Exchange. I always look at that from an equity standpoint. And more importantly, what I would do with shares like this is go to their investor presentations if you want to find out about what's happening in the world and read them. They're normally quite interesting reads. They talk a little bit about financials, and most of it is about what's happening in their underlying commodity markets. I recommend you do that.
Sorry, Julian, I was away for a second. Read what?
Read their investor presentations.
Fantastic. Got a final question for you, mate. Bank Holiday Tuesday in America, Memorial Day. What does Bank Holiday Tuesday do to markets?
So normally coming into bank holidays, markets trade reasonably well. I was surprised on Friday the stocks weren't up more. I would suspect tomorrow, Monday, could see a reasonably positive market if the holiday seasonal pattern is anything like it normally is. Post that Memorial Day move or post that holiday on Tuesday, I am less than enthusiastic about the outlook for stocks.
Cheers, Julian. Thank you very much. Always appreciate your input. Next, we're going to hear from Ash. We're going to go from the chilly but reasonable town of Auckland to the beautiful sunny beach side town of Brighton and Hove Albion, the home of the mighty Seagulls. Ash, trading data. What's the data this week? What's the key data we're looking at?
Well, so yeah, let's bring it up. I was just browsing through this earlier on, and straight away it's nice and easy to see where the red blocks are, which really indicate extremities for us. And yeah, we've got the pound here showing red block of index at 3 years at 0%, showing selling pressure. Index at a year and a half, 0%, showing selling pressure on a nearer term. An index of 6 months showing 0%, so very, very near term, it's showing selling pressure. We do see the same with the Canadian dollar. The reason I'm going to focus on the pound is because when we look at the longs versus the short, and it's very, very slight, but you can see that the longs here have reduced their position by 5%, so negative 5% on the longs, and the shorts have increased their position by 1%. So small margins, but when you look at the Canadian dollar in comparison, the longs have actually increased their position by 4%, and they've also increased their position by 2%. So really the spread is more positive for the Canadian dollar than it is for the British pound. So let's focus on the pound and open up the chart. And what's interesting here is the firstly the price of where the pound is in comparison to the dollar. Back in 2018, so around about mid-2018, you can see here's the January 2018 high. That ended up being a double top just a few weeks later at around about in April. And now we're seeing ourselves, we did see that high in 2021 in February, and really we're back there now. So it's an important level. That's the first really notable thing, that price is at a potential inflection point here. And then when we go down, we'll look at the index here. Let's not worry about the long and the shorts for right now, but let's just focus on the index. And if we just do a very quick analysis on what tends to happen when the index is down here at 0, and we'll go back and just have a look at a few of them here. Here's another example here, and the price dropped. Here's another example here, and the price went sideways, but you can see that it was quite weak. Now here's another example here as well, and the price dropped. So far it's kind of giving us the idea that this is a pretty good gauge of what's coming for this particular currency. Again here, the index was at 0 and the price dropped very, very aggressively. We can see it didn't quite touch 0 here, but price did drop. And you can go back and just have a look at all of these. Very close to 0 here, the price drops. On 0 here, and here the price climbs a little bit, but then eventually the price drops. Now this is important to note because we need to always remember that the COT data is not a timing mechanism. It is just telling us the overall sentiment that the commercials are putting on a particular currency. Where do they see the risk? Now they will hedge their positions wherever they see the risk. And what they're telling us at this particular point is that they see the risk on the pound to the downside more than they do to the upside. So not that they are saying that the market will come down, but they're saying that's where they are more concerned. They're more concerned about the downside move than the move to the upside. And when you start to kind of put together a picture of where we are in the trend, this is often a very, very strong signal of what's about to happen. Now let's also focus on the seasonality with a pound and see what that is telling us. Is it telling us that we are in a seasonal short, which would back up what the COT data is telling us? and we're just getting into June here. So this would be the June historical seasonal pattern. And if we just take an overview, I'm not really interested in the peaks and troughs. I'm just interested in where we are to where we may get to. Is the low of the particular of the precise point that we're in now lower than where we are now, or is it higher? And you can see here that it is lower. Now this weighted average does actually show a lot more of an extreme. So looks like we're looking to around about July before we see some seasonal bias in the pound to the upside. So COT data is suggesting extreme selling. The seasonality is suggesting that we do have the green light to go on that extreme selling. So the last thing that I would want really is something that would drive prices lower. Now, what's happened right throughout the world is that we've seen central banks getting involved and effectively adding much more liquidity into their system. And what we need to then do is say, okay, is the pound likely to be the first to take that liquidity out of the system and potentially raise interest rates? Is one tool they could use. Could there be some tapering on the bond buying? That's another tool they can use. There's a number of tools. Will they use a tool which is more hawkish, which the words and term hawkish would relate to some kind of tightening, or would it be more dovish, where it's more expansive and more accommodative? So far, we haven't really heard any government specifically saying, yes, we've had New Zealand saying that they may do it next year. I think Canada banded that around as well. But really what we're looking for is, who's going to start talking about, who's going to start talking in a more hawkish tone. And then we could use the pound maybe as our pair to trade that particular currency against. So we go pound short versus the currency that might start talking a more hawkish tone. The data is pretty good across the board. So right now there's a lot of confluence really between many economies, and it's making it very difficult to kind of get some separation of which economy will be the one that is likely to do that first. And it's also very difficult because so many of them have got so much debt. It's very, very hard for them to taper. And that would lead us to maybe something like the Swissy, which is in nowhere near the same amount of debt as many of the other currencies. So pound short is the big takeaway. Picking the correct currency is going to be the challenge really in the coming weeks.
Cheers, Ash. Thank you for that. So we are looking for pound short as we head into June. We've got cotton favor that and seasonality in favor that. Looks a good trade if you can find the right technical setup. Thank you very much for that, Ash. Next, we are going to go and we are going to talk oil with the Ainslie. Ainslie, you with us?
Hi, Paul. I thought we'd talk gold. Can we talk gold?
Ainsley, we can talk gold. I know you're excited to talk gold. Are you going to grab the screen?
I'm going to grab the screen. I am. But
been another good week for gold traders, hasn't it, Ainsley? We know there's been a bit of hesitation, consolidation, but we have started building it up in the last few days, right?
So we started to pull it on, and we all know that once gold sort of breaks out of those levels, she goes for a bit of a push and pull, goes back and retests levels and looks to see what we can get. We look for an entry after there was a break of 1900. Just to give a recap, I looked at this and we were sitting patiently, being very, very boring, I guess, going consolidation, more consolidation, bit of breakout. I was waiting for it to be a false breakout. Okay, so which is quite normal. We've been seeing that happen as soon as it goes up. We've been watching it backwards and forwards all for the last couple of weeks. We then had this break and it was off and running to the races, and she went and she broke 1900. So had a bit of a pause around this is the weekly R1, and I was waiting for it to reverse and sat there patiently, and then all of a sudden it popped, went up, but then it came back again. So we had then a couple of days of retracement. I had a higher low in place, and I thought, okay, we're going back up again. We're going to have another look, but we didn't. We had this huge long-tailed pin bar here that came down and checked out this level here. And it was very unfortunate because we had a trade on, and with stop loss at 1885, took it out, promptly reversed, which has been the story all flipping week. It takes us out and then turns around and reverses again, and it's just really, really tough. Why gold took off, I can't give you a clear explanation. There is like 20 explanations as to why gold took off. Is it crypto related? I don't think so at all. Is it a safe bet? Is it an inflationary story? I think we're a little over the inflationary story in this regard. But seriously, let's look at this. We've been looking at this weekly chart now for some weeks. We've had a break. We're now back over. We had a good solid close after we had the pin bar in place, and then a break above R1 again. We've got a good strong close above the 1900 level. So we broke the 1900 level. We've stayed in the 1900 level. I think we're going to keep going. How far up? Look, I think everybody knows I'd like to see gold up around 3,000. Let's just be a little more realistic and try and go back to 2,000, and let's see how we trade on that for the time being. But that's where I think gold's going to go. I look, stops and starts and wide stops with gold. Even $15 stops didn't save us during the week, but that's just the way it went. And can I just add very quickly on copper, on Dominic's point? Copper is definitely on a roll. He mentioned $4 being the cost of production. It's $4 a kilo. What we are seeing is $10,000 a ton. Big difference in the correlation there. Yes, I believe copper's going to keep going. Copper, after iron ore and aluminium, is the third largest imported metal into the US. The US is looking at 40% of their the US grid being under stress this coming summer. They have a $10 trillion quote to upgrade their electricity grid. They won't do that. They've spent all their money on stimulus checks and all the rest of it. That's where the demand's going to keep going. If you look at some of these CEOs, the top companies, the top listed copper producing companies, Dominic, are BHP, Rio, Glencore, Vale out of Canada, Barrick Gold. What do you know? These gold producers also do copper. So just keep an eye on those from the fundamentals. It's going to be a huge, huge demand in the green transition from fossil fuel to energy efficiency. So just as an add-on to that, I just wanted to clarify that because we just want to make sure we quote the right numbers. $4 a kilo for production costs, 10,000 per ton is what we're looking at as well. So just to clarify.
Cheers, Ainslie. Thank you very much for that interesting time for all the precious metals. I do think the copper story will be interesting to unfold with the need of it for power. Great, guys. Thank you very much, Ainslie. And let's talk crypto with Sukri. Sukri, what a weird week for Bitcoin, eh?
Good.
Seems to rally, went sideways, back 35.9, isn't it?
Yeah, back. But something happened today. Or was it last night? Okay, let's see. This is so key. This is critical because nowadays, during the bull market, the crypto markets go up during the weekend. So during the bear markets, you must be ready for it to go down. Now this went out, this was the big fall, the crash or whatever that blew so many people away. Now this happened before the NASDAQ market opened again. There was no reference. This happened last weekend, okay? This happened this weekend. So we kind of hit a low here, we rebounded back. This is key. So we are chopping up slowly now. I know you guys wanted to go up here immediately. That is not good. This is good. This is good because we're chopping up slowly. Now, after we determine this is good, then we have to see what are the big boys doing. Let's see what the big boys are doing. This is very, very interesting because here you have the wallets, the big wallets. And we had a crash on May 19th. Oh, look what those big guys are doing, right? Of course, they don't tell us. Ray Dalio suddenly says, I have Bitcoin. Carl Icahn comes out last week saying, I'm buying 1.5 billion of Ethereum. So this is good that during this time, the big guys were accumulating. It did go down and now reaccumulation. So indeed, there was a transfer from the small boys who got hit by all these liquidations and possibly had to sell the real Bitcoin to the big boys. So this is good. That means during the crash, the big boys were buying. The next thing is you got to look at the Grayscale Bitcoin Trust, because this represents what the big boys are doing. And you look at this. So this is good. I'm going to look at this in the future. This is like an RSI divergence, you know. You saw, because when this happened means the big boys were not doing anything and the prices were going sideways. And suddenly what happened? Bam. And now you have reaccumulation again. So how do you know we're done? Well, we got to wait until it does like that. And then it goes up and it has to clear this level of 42. So I am saying Bitcoin, just take your time. Don't panic. Don't go up too fast, because, you know, and I do expect that if we come by next weekend, we'll probably test this again. Take your time in doing this, okay? So what is my advice to you guys? Like this morning we had class, stake your things. Stake it to earn more interest. I also found something that was just released that you can even stake your Bitcoin. I didn't even know it existed, but it existed from a very good company. Next thing is, but you know, I think we have to look at it overall. So tomorrow I'm going to tell you what a bear market looks like, and I have real evidence here. So again, one of the things about the bear market, I'm going to be frank with you guys. So I want you guys to listen tomorrow. I find now, I'm encouraging staking. It is easy to get free tokens. I've been getting free tokens of some good IDOs, you know. I just want to be frank with you. I don't want to break the suspense. That is a bear market signal. So we have the bull case with institutional slowly coming in. We have the bear case where it's easier to get the good IDO tokens without paying anything. That's crypto.
Crazy as ever, Sukri. Thank you very much for that. Sukri, I hope you've seen your Telegram. We're having a chat in about 4 minutes.
Yeah, and then don't forget, on Saturday there is a trading class, and I will show you the big picture. And it's very tricky, you know. I will show you some indicators. If you guys want to do homework, go see the pi cycle top. It says we are end. And I'll show you another indicator, I forgot the name, that shows you we are not there yet. So again, there's always bull and bear.
So next Saturday's course with you, right? And that is learn to trade crypto. So that isn't putting on exchanges. That's getting it into something like eToro and actually trading it as if it was for it, right?
Trading it safely so that, you know, you guys don't, you know, because during a market panic like this, guys, if you have it in 5 exchanges, you're not going to make it because it falls so fast. If you have it in your wallets and move it to exchanges, can I tell you to forget it? Because the gas fees are like $1,000. So we got to do it the right way in order for us to go in and out.
Cheers, Sukri. Thank you very much. That is crypto. We are going to go back to Ainslie and talk oil. Another one, Ainslie, good week for oil in the end, wasn't it?
Oh, it was good. It was good. And yeah, let's have a look at oil, because, hey, it's been an interesting, I just need to pull that over. Interesting week. So we had a really big move up, and I can tell you right there, after the break of the weekly pivot there on the 4-hourly chart, we had a retracement, we had a recheck. But what actually happened right there, Paul, was there was a terrorist threat. And there was a terrorist threat in Minsk, and that was when the Belarus government sent a jet fighter to accompany a civilian plane back down into their airspace and make it land in Minsk. There was then a further terrorist threat. It was pretty ugly. It was a journalist who was quite a bit of a dissident, and you know, there was a political story happening there. But and this goes to show how sensitive oil is to any kind of bombing threat. And as soon as there is that threat happening on the waves, bang, oil just takes off. And she did, and it happened really, really quickly. And if you weren't listening or you weren't in tune, there was no point in trying to jump that. It was just a fundamental news release, potential bombing, potential terrorist risk in Minsk. There could be, and the thing is with terrorist risk, when they say it's a terrorist risk, it just goes to who's behind it, how far is it, how planned is it, all the rest of it. So all of a sudden oil takes off. It always does when there's bombing risk. And then everything calmed down, and the rest of the week basically was very, very quiet, as it just sort of like, oh, okay, there's nothing happening, and it just went sideways. Then we had a big move up towards the end of the week. And why did we have a bigger move up? There was a court case, Dutch Shell Oil were told to cut their carbon emissions. Exxon have been told to cut their carbon emissions. These are court-ordered instructions to companies to cut their carbon emissions, which will impact their supply of very major oil-producing companies. It is going to have an impact on supply. Supply reduction, demand is still going. That's why we had that boost up. We had a pullback by Saturday morning, and I'm saying Saturday morning, it's Saturday morning my time, close of New York, last couple of hours of New York session before it took down and came back up again. But that's where it's at the moment. It's just quite volatile. Those court decisions really impacted oil as far as price went after a week of consolidation. And it again just shows it's not just supply and demand as far as, you know, we always used to trade the jolly oil inventories on a Thursday morning at 1:30 in the morning. And it just isn't the same. It's anything and everything is impacting oil. It's so sensitive, really, really sensitive. So we saw the IEA impact oil last week with nuclear deals and Iran and all the rest of it. And there was huge moves. And then we've had the complete reversal this week. So just hang in there, guys. Where it's going to keep going, will it go up to 70 this week? Don't know. Depends what bombing or whatever, or the threat of. But that's where we're at the moment. We're looking okay. We're looking still. I think it's still going to roll upwards, especially with those. I think there's more to the devil's going to be in the detail with those court deals and the instructions to a lot of the major oil producers as to how much they're going to have to curb to meet those restrictions. So it was a first. I don't think it will be a last. I think it's going to have an impact with Dutch Shell Oil. So that's going to be interesting to see how that all unfolds. I think it's going to actually push it up until we see the bigger transition across into the green energy, which is, you know, we all know is a few more years off, but let's see how that goes.
Cheers, Ainslie. Thank you very much for that. So oil at the moment reasonably volatile, and we are looking perhaps with a bit of a bullish bias with some opportunities in there as well. Next up, we've got Lloyd talking currency strength index. So we all know what the dollar index is. Lloyd's going to have a look at all the currencies based on their basket, what they're worth as an index, and how perhaps to take positions based on that. Lloyd, are you with us? Here he is.
Hi, Paul. Yep, I'm with you. Okay, so let's see what happened last week for the last two trades. So for CAD yen, I wasn't triggering into CAD yen. I mean, the direction was right for me, just I don't have a trigger for it. So CAD actually did rise. Probably Ainslie already explained why. Now, I had suffered a loss for dollar Swiss. Yeah. So price actually did trigger me in with this bearish bar. I was taken in, and I think the next day I was taken out again. Yeah. So it's been quite some time since I actually suffered a loss with this particular way of analyzing. Yeah. So, but I think I got to pay my dues sometimes. So all is fair and good. Now, with coming up this week is that not much has changed, but what is being upgraded is that pound. I'll be quite bullish about pound for this coming week. Yeah, so for last week, I was actually expecting pound to retest 140. It didn't. So it ends up on a weekly bar, it gave me a pretty bullish bar. So now this is just, to me, a short-term horizontal level, really just for me to take profits. So this upcoming week, I'll be looking for any opportunities to long pound. Yeah, it does have great potential. You can see that from 2016, it broke into this huge weekly range. After that, it hasn't really pierced above 140 for quite some time. Now it has closed above 140. Now, on a really, really bullish outlook, it might even go up to 170, but that's really being optimistic. But what I'm trying to put forth is that is there potential for pound to grow? There is. Yeah. So when price goes close above 140 and it doesn't really show any bearish bar, pretty positive about it. So let's stay tuned and look out for trading opportunities to long pound. CAT. Now I'm still bullish about CAT, but being mindful that there's a strong horizontal level here. So this coming Monday, I will see how CAT reacts to this horizontal level. If it's Monday, it's going to be a bullish close, then I'll be happy to look for more opportunities to jump in for CAT to go long. Now Swiss a bit hazy about this. Hasn't really shown where it wants to go. Last week I was being bullish about it, but you can see that this is a doji bar for me. Neither bearish nor bullish, so I'll just chuck it one side. Don't really wish to trade it. Kiwi, same thing for me. I think it's becoming best buddy with Aussie. This two just seems to be stuck in this range, doesn't seem to know where to go. But that also means that for range traders, there will be opportunities to look out for if you are range trading them, especially if you pair this two up together. I'm not a range trader per se, so I don't really trade. I don't really want to trade any pair that is non-directional for me. Now Euro, this is interesting for me. For Euro, you can see that short-term horizontal level, doji bar. Now and the week before is actually a high test bar. So what this suspect to me is that bears might be coming in for Euro. Yeah. So keep a lookout for short opportunities for Euro. And if it really turns into a bearish bar, we can be trading a first retracement, and this would be I would say a fantastic trend trading opportunity. Yeah. DXY for this week, as expected, price when it comes to horizontal level, if it does not break fast, just hold your horses. Usually the opportunity might come 2 or 3 weeks down the road. Yeah. So I'm still be bearish about dollar. Yeah. This is $90, and you can see from past $90, this is a huge level to break. Yeah. So price might just linger at this level for, I would say, probably a month. I don't really know, but my point being that at horizontal level, especially huge number, $90, be wary. Yeah. No doubt the overall trend is looking bearish. Yeah. So I will still be loading up bearish position for dollar, just that be responsible about it. My way of doing it is just to reduce risk. Yen, very nice bearish bar at this level. So I'm just going to short it all the way to $90. Yeah. So for the upcoming week ahead, what I'm going to look out for is really I'm trying to trade pound yen. Yeah, you can see that on the 4-hour chart, bullish bar, sort of a like mini flag for me. So I like trading these such patterns. 2 ways for me to go about it. Either I wait for a break and retest of the high, or I'm just wait for a fake breakout, and then I'll put in a long position. Now, I'm still gonna short dollar Swiss. Yeah, I lost our position on dollar Swiss last week, but this week, since I'm still bearish about dollar Swiss, I'm just waiting for price to break below the same horizontal level, which now has the added benefit of trend line. So at this position, I'm going to put in a short position if it does happen for me. Still the same method, break and retest, nothing fanciful. That's all for me.
Cheers, Lloyd. Thanks for that. If you need to borrow my TradingView login at some stage, mate, to stop the pop-ups, just let me know. You can just log into my account and do it. Thank you very much for that, mate. Always fascinating. It's a bit of a different way of looking at markets, and I like different ways of looking at markets. Rightio, we are going to finish up today with the technician's 2 cents worth. Geoff, what are your 2 cents worth? How are things technically?
G'day, mate. Not too dusty, although I've got to say the normal things that I look at this time of the week are not prolific, and they weren't last week either. But we managed to get a few directional biases in the right hole, and that's a good thing. So let's see. Well, I agree with Lloyd. Not a lot's changed in the market, and for that reason, I'm probably still hounding on a couple of currency pairs that I have been for some weeks. One of those is Euro Pound, and I'm looking at Euro Pound on the monthly chart at the moment. which suggests to me that we are still in a downward trajectory, given that we've lastly come off the top of this range, this rectangular box, whatever you want to call it, and we're now looking to head to the bottom of that range. Now, last week's or last month's, well, it's still this month, isn't it, really, I suppose? I'm referring to last month because tomorrow is a bank holiday in both London and New York. So odds of me, or the chances of me trading will be absolutely minimal, if not non-existent. But I do see some more downside here for Euro Pound. We tried to get into this last week. We got into it all right and just missed our TP1, and I suffered an ignominious exit on that one where I should have taken profit. Got a little bit over enthusiastic on that first take profit level. But since then, I've seen a key reversal bar here on the weekly chart, which suggests to me that we are going to see more downside. If I convert that to the daily chart, I can see a clear break of this support trade line, also a trend line, and a retest of that on Friday as well. That kind of gets me a little bit interested in the downside already, even if that bar there wasn't accompanied by that retest bar, which is also a high test bar, almost off the weekly pivot, certainly off the daily pivot last week. I think it would even be tradable by itself. I'm inclined to place an order underneath this bar with a stop loss above it. It will be dangerous, and I would recommend that if you are considering following that, to get some profit in the bank at that level there, which is what, 85.60. So it'll be a very tight TP1 on that, but I certainly will be doing that on Tuesday, guys. I won't be doing it tomorrow. So if tomorrow's bar moves a whole lot, that probably won't be in play. But at this point in time, that is my intention to trade that bar. So I'm looking for an inside bar tomorrow, and hopefully that will be the case. The second one I'm going to look at is EURGBP, and of course, those of you who follow Ash and myself will know that I've been in EURGBP for 100 years. Well, since the 14th of January, actually, I've been trading this short. Now, I think there's another opportunity here, frankly, and I still see downside in this. We're coming off these, well, triple top, call it what you want. We've had a big bearish bar back in, where are we now? March. And that was followed up by a little inside bar. We only just broke to the downside during this month, and we've come off it again. And I totally get that. So that makes it a little less enticing, but we are at a very crucial level here on the weekly chart. Had a key reversal bar the week before last, and now we've got an inside bar. I like that particular formula. Actually, I think it is another key reversal bar. I think the high is a bit higher. So it's probably a tradable commodity once again, except, again, I have to reiterate that there is no market for me tomorrow with both a UK and a US bank holiday. But I do like the scenario here. I like the setup. We've got a trade line that's been broken and retested. We've got all sorts of things going on here. It's pointing to me to be a downside entry once again. That's last week, so please ignore that. I'm just still bearish, I suppose, and I can see no reason to stop that momentum. I think this phase is just turned into phase 2, and I'm looking for phase 3, and there's pretty obvious targets down here at the bottom. The last one I'm looking at is pound Swissy. Now, pound Swissy is kind of a favorite of mine, I suppose, because I've been following it for a long, long time. And now I saw this last month, obviously, and I do have an order set above, what's that, April's candle on the monthly chart, and stop loss is below the current month, just about. I'm going to hold that until I either hit some form of profit or a stop loss. This will happen, may not happen at Christmas time, but at this point, I'm still going to hold on to that trade. Now, this week, we do have not a key reversal bar because it hasn't closed on or near its high. But that said, it's given me a strong indicator, and I've got to go back to fundamentals here, where the Kiwi had a very positive shot in the arm last week because of not a movement by the central bank, but a suggestion by the central bank that they are considering raising interest rates. Now, whether that's true, false, or indifferent, the market reacted to that in a very, very positive fashion. However, the pound seemed to withstand that or come back off it, I'll put it that way. And you can see that in that candle. So to me, that indicates that the pound is ready to go here against the Kiwi again. The problem, of course, is that we are at a resistance level if we're going to take this trade. So I'd really like to see Monday just go nuts with no bank, no central, or no, with both bank holidays rather, and take this out, take these highs out, come back and retest that level. And then I think there's definitely a new trade in there for me on the weekly chart. So to get into that on the daily, I'd like to see, as I said, the breakout, or the other option, of course, is to come back into here and we can get a far better price. Maybe we can get a false break of support, that support area there. If we came back below here and then got back above it and retested it, I think that would be an excellent place to play along on pound Kiwi. So pretty much old chestnuts are the fashion of the week this week. That's what I'll be following, but I do reiterate, I won't be trading anything tomorrow because it is a UK or a UK and a US bank holiday. So for this week, that is my 2 cents worth.
Cheers, Geoff, and worth well more than 2 cents if you ask me. We're going to have Maya do a prize draw now for the entire show. If you've been in the Zoom session, she'll put you in the draw automatically. If you've asked any questions, she'll put you in twice. If you're on Facebook or YouTube and you want to be put in the draw to win a $50 Actions 12th voucher, then just write your name into Facebook or YouTube, and Maya will add it to the draw. We're going to give her a few seconds to do that. I do want to remind you guys, next weekend is a big weekend for that. So it's a big weekend for us. On Saturday, we've got Shukri doing trading of crypto, and on Sunday, we've got Alexis doing returning to Forex trading and going back over the new Wave Rider strategy for you guys. Maya, you ready with the draw? Let's do it, Maya. Maya? Cheers, thank you. Right, here we go. Okay, if you happen to be you and you're in the room, then drop us a note and let us know that you're there. If you reply in the next 15 seconds, you will be our winner. And if no one replies in the next 15 seconds, then we will do another draw. I'm not quite sure here. Let's see if we hear from Marcus Yang. Is it Marcus Yang? Mai, can we see that? Can we see that circle again? Yu Chong Lee, are you in the room still? Doesn't look like you are to me. Looks like we can have some more fun with it.
No. She's raised her hand. He raised his hand. Yeah.
Oh, there we are. We've got a winner. Mai will get your details to James. He'll be in touch early in the week with how to pick up that prize. Thank you very much, Yu Chong Lee. Welcome along to the show. Okay, everybody, first of all, thank you for joining us. Have a good week. Remember, stay calm, make good decisions. These are still some pretty interesting markets. They'll shake out a little bit. Trends will become clearer. Choppy last couple of weeks, but there was something I do want to talk about, but it is gone. I'll catch it next week. I'll see you guys next week. Thanks, guys. See you later.